Welcome to the fourth edition of Spark Tank. We have a bunch of founders pitching a bunch of VCs today. It's going to be pretty fun. I'm going to bring our founders on stage. Axel, I guess you can start with a quick intro about yourself.
Sure. Yeah, my name is Axel Kloth. I'm the founder and CEO of Abacus Semiconductor Company Corporation. It's a company, fabulous semiconductor company. We focus on building processors and accelerators and smart memory for AI particularly, because the current approach of doing AI is a little bit on the power-heavy side. And as we may have known and may have noticed, everybody who wants to run an AI data center today thinks about putting a nuclear power plant right next to it.
There you go. Sylvain, quick intro about yourself.
Yeah, I'm Sylvain, originally from the UK, now based in Zurich, Switzerland. Career in banking, founder of Switzerland's leading natural sun care brand, traditionally protecting skin, but now looking to protect even more.
Zeshan, quick intro about yourself.
Hi, my name is Zishan. I'm a co-founder of Refi Trading. We give every trader, market trader, the same AI quants and risk infrastructure that hedge funds keep behind closed doors. So what we do is we make Wall Street AI radically accessible.
Adam, quick intro about yourself.
Hi, Adam Good, co-founder Auric Essentials. We're building the Ascent intelligence layer for emotional well-being. We call it a new category called Mood as a Service.
Juan, quick intro about yourself.
Yep, my name is Juan, founder of Smart Trainer. Smart Trainer is an AI assistant for restaurants and retail that's providing actionable suggestions to them using their data-driven information.
Mark, my friend Mark, a quick intro about yourself.
Hey, my name is Mark. I'm a co-founder of Outdoor Builders. We are building the point solution for the outdoor building industry in the United States, and we're expanding to the world.
Thank you, Mark. Hey, quick fix your sound. Usually your sound's better, Mark. Maybe change mic. Eric, a quick intro about yourself.
Yeah, hi, I'm Eric Burgess. I lead CredTent, which is a organization basically saying, AI companies are being sued for stealing creative content. CredTent is the neutral licensing infrastructure that solves it, scientifically certifying the work, valuing human composed content, and offering full cycle licensing for AI training and display rights to companies to reduce AI companies' legal risks while making sure that creative folks embrace AI in the way they should.
Abby, a quick intro about yourself, the unmuting of the mic.
Yes. Hi, this is Abhilasha Kutoda. I'm based in India right now. Founder of Nextstop AI, building the next generation of AI-powered agentic travel platform. Have background in international business management, AI, and software engineering. Thank you.
There you go. Maybe turn the camera off or fix the connection because it's a bit laggy. Going to bring the VCs on stage. Oksana, welcome to the show. Tell us a bit more about yourself and your fund.
Greetings from Austin, Texas. Oksana Malasheva here. I lead Sputnik ATX VC. We are on a mission to find, fund, train, and support future unicorns that are not based in the Silicon Valley, because we believe that talent is everywhere, but opportunity is not everywhere, and that's what we do. Backed more than 78 startups. Our check size is 100K to 500K and up.
There you go. Sunny, quick introduction about yourself.
Hi, everyone. I started India's first Bitcoin exchange 13 years ago. I'm also the director and biggest shareholder at a public company here in Canada called Humanoid Global, where we invest in humanoid companies. And I also invest in AI companies. Happy to be here.
Hey, Mardian, welcome to the show again. Quick introduction about yourself.
Hi, Marian Barber. I'm in Berkeley, California. I work with Future Frontier and some other VCs that are out of Sweden, Copenhagen, and Munich.
I'm Charles Cormier. I'm the co-founder at RazRockets.com. We do fundraising for founders. I also own a fund called Mac10. We invest 10 mil per YC batch. So let's start with the first pitcher, guys. Thanks for the quick introduction here. So up first is our friend Zeshan. Zeshan's a top guy. Really like him and his business. Zeshan, the stage is yours.
Thank you. Can everybody see my my deck?
Yes, we can.
You guys can see my deck? Just
Yes.
confirm.
Yes, sir.
Okay. All right, great. So as Charles mentioned, my name is Zishan. I'm the co-founder of Refi Trading. So yeah, we give every trader the same AI quant risk infrastructure that hedge funds keep behind closed doors. So your assets never leave your broker. Every trade is cryptographically verified before execution, and the entire system is built to be regulated from day one. So a little bit of background about myself. I've spent 20 years in fintech and electronic trading. I'm also a professor in computer sciences, mentoring the next generation of technical founders on product development, blockchain and cryptography, and AI-powered software. My co-founder, Daniel, is a quant. He's our chief quant and chief engineer. He spent the last decade building infrastructure for FX and equities inside of hedge funds. He has built reinforcement learning pipelines of over 400 signals based on modern portfolio theory. To understand where Refi comes from, I need to take you back to all the way back to February 20th, 2020. The S&P 500 hits an all-time high, but in the background, there were some rumblings. I think we all remember those rumblings, right? 2020. So I was reading the headlines. There was a mysterious virus in Wuhan. Towns were getting locked down in northern Italy. Supply chains were starting to stutter. I looked at my portfolio and I had this gnawing feeling in my gut that the world is getting sick. Maybe I should rebalance, take some chips off the table. But the market is up and I'm up, so why mess with it, right? Human instinct tells you just leave it as it is. It's just a flu. Well, 3 weeks later, the entire global economy shut down and I lost 34% in 14 days. So that was 7 years of gains all in an afternoon. So March 23rd, 2020, the bottom, COVID hit. The world is in complete lockdown. I know intellectually that equities are on sale, but I'm paralyzed. I'm watching the news, terrified, so I wait. By the time I finally act, the recovery is half done. The quants, they were out before the announcement and they were back in at the bottom. Retail investors totally paralyzed, victims of the market. So this is where Refi Trading enters. We are the first non-custodial institutional grade quant infrastructure. We are not a robo-advisor that puts your static index fund and forgets about you. We are not a black box trading bot that asks you to transfer your control of your brokerage account. We are a glass box, however. Here's how it works. We keep your assets at the broker, whether it be Interactive Brokers, Alpaca, Tradier, Wealthsimple, whoever you use. Our reinforcement learning agents monitors the market 24/7. It detects regime change, shifts for growth to volatility, and in milliseconds can execute a trade, effectively rebalancing your portfolio. But here's the real innovation. Before any trade is actually executed, it has to pass through an atomic dual proof gate. So there's a quantitative proof where we have a zero knowledge proof verifying the trade and it doesn't violate any of your risk limits. And then we have a qualitative proof where we use Chainlink automated compliance engine to verify the trade complies with regulatory sanctions. So if the math doesn't add up, we don't make the trade. So how does it work? Well, if you go back to the crash and you look at this graph in front of you, the green line is refi and the gray line is the buy and hold. So you don't want to be sleeping when the gray line hits. So over a verified 3.1 year walk forward period, we've built some benchmarks. So that's covering, post-COVID boom. And we have delivered 28% CAGR compared to 13% against buy and hold on the S&P. And if you really look at the risk, that's where the magic happens because we only do a 7.5% drawdown versus market crash being, negative 25. So we aren't guessing, we're actually engineering returns. So we're democratizing a $10 trillion industry, but our go-to-market is very strategic. We aren't just targeting 200 million retail traders tired of losing money. We're actually starting with the seekers. So we're going with micro funds, family offices, people that manage 10 million to 50 million. They're too big to trade manually, but they're small enough to, basically use our system. So why us? Well, robo advisories are way too passive. They just ride the market down. copy trading is just too risky. And so ReFi is the only solution that offers active alpha and non-custodial safety. So we're executing in 3 phases. Phase 1, we're already regulated in Qatar, where we're already licensed through UFC and are able to trade with family offices. Phase 2, we scale into the UAE and the KSA while entering the US market through an interesting rule called the SEC Rule 203 rule. And that's an internet advisory rule that has changed over since 2024 that is perfectly aligned to our platform. And then phase 3, we go into depth. We secure an AGDM license in Abu Dhabi, and we unlock over 1 million UAE retail traders. So we're raising 2.45 million in our seed round. We have 1 patent pending already. We have 5 more ready to file. We're allocating 35% of our raise to engineering to stay ahead of the arms race. And of course, legal and regulatory is quite an important aspect of our business going forward also. So thank you very much. And if you have any further questions, happy to answer them.
Thank you, Zeshan. Oksana, let's start with you. Any feedback for Zeshan?
How do you, I like this idea, first of all, very much, because there are a lot of people that are trading and they have really rudimentary tools. So upgrading this even a little bit, I think will be universally useful. I also like that you guys seem to have found a market fit because you come from the industry, just not a wild idea. Question is, talk to me about your data and your data sources, because no matter what your principles are, if you trade in a junk data that had not been cleaned well, your best algorithm will be challenged by that.
So we base everything on a modern portfolio theory, first and foremost, right? So we use existing feeds that are out there that are live, to the S&P, to the NASDAQ. Maybe 5 or 10 years ago, latency was a problem, but now everybody has access to the exact same data through, there's Chainlink, for instance, Oracle's. There's that we use metric. So there's a number of data feeds, but they are milliseconds, and it's important for our business that we have to have that access to the best data feeds possible. But more importantly, what we're doing is we're also creating a reinforcement engine loop. So what that means is we're learning about how the trades are being effective, and then we're adding a reinforcement loop to that. And we are actually in a program with Alberta Machine Intelligence Institute out of Edmonton, Canada, where the godfather of reinforcement learning actually is the head dean. And so we do bi-weekly coaching sessions to make sure that our algorithms are aligned, and we're one of the first groups to get this type of information, those types of quantitative algorithms for our fintech product.
Look, I think it's interesting, but I would double click on that in collocation because I don't buy your data argument. Separately, we'll be going into what specifically in the modern portfolio theory you address. Not time and place now.
Okay, sounds good. Yeah, no problem. Yeah.
Marian, any questions or feedback for Zeshan?
So I have a couple questions. One is, I like the idea. 2 things. One is, so you have a patent pending, and you have future patents, and so are those patents on algorithms?
Specifically, let me read you exactly what the patent is. It's system and method for non-custodial zero knowledge verified reinforcement learning automated trading. So what that means is we're using zero knowledge proofs and reinforcement learning algorithms to execute automated trades.
Okay. And so do I understand correctly that it's a team of 2 right now? Because I just want to, one of the things I hear from most of the venture folks that I work with is that no investment in any kind of software play or SaaS play, because there's crews that are doing hackathons that are vibe coding anything. And so how do you protect yourself against that?
Yeah, absolutely. It's a very good question. And you're really, what it is that our RL pipeline is our moat. So just like how hedge funds protect their alpha, they keep it in-house. That's something that we also do. And we're basically protecting this data signal that we've created with 400 different signals that's constantly evaluating the market in a dynamic way. And we're keeping that in-house. We're not licensing that to anybody at all, right? And so that becomes our moat. That data signal is really where our focus is. And constantly evaluating that data signal through this reinforcement learning loop is the key to that. And that's obviously an algorithm.
Okay. And then what are your next 2 hires in your mind? Just putting you on the spot, not putting you on the spot.
No, that's a full
hires.
Yeah. So we need a CRO officer, an officer that allows us to operate in the United States from a regulatory standpoint that oversees all aspects of our regulatory filings. And then we need DevOps. So just our ability, what we've done is we've built our system from a technical word, but Terraform. So why we did that is because every country is now requiring sovereign cloud for any kind of fintech properties. So that allows us to basically drop our product into any sovereign cloud and get up and running in the same manner that we are running in a different domicile. So we need a DevOps person to be able to do that, and we need a regulatory overseer to make sure our filings are done correctly.
Good. Thank you.
Got it. Thank you, Marianne. Sunny, any feedback for Zeshan?
Yeah, so you back-tested through post-COVID boom, right?
Yes.
That's arguably maybe one of the easiest bull runs in a generation. So what happens to your reinforcement learning model in a prolonged, let's say, sideways or stagflationary market?
I mean, that's the interesting thing is when I say to you that we beat, this bull run by 28%, that's actually quite a thing because, or on CJGR, because it was actually a strong run during that time, right? And so we're basically able to establish that even on an upside swing, we actually beat the market. And the main thing is it comes back to modern portfolio theory. So what we're doing is we're making 4 to 5 trades a week on any given asset. The other aspect is that we are building portfolio baskets. So we're taking baskets of equities and we're trading them together. We're rebalancing those equities inside of their own basket. So the more quants that we're able to hire, the more agents that we're able to build. Just to give you an example, a major pull in the GCC is, of course, Sharia compliant. So there's a list of, maybe 65 stocks that are able to be traded Sharia compliant. And so we can build a basket of those stocks and have a Sharia compliant basket to be able to trade, and so what we're basically doing is we're customizing different baskets of equities for any particular hedge fund based on the strategy that they need. And so that enables us to basically do that. And of course, using modern portfolio theory, we're gonna be able to we're not doing high velocity trading, but we're making, maybe 4 or 5 trades a week on any given asset just to make sure that we're long in the market and shorting it at the right times.
Zeshan, I have a question for you. What's your go-to-market plan?
So we've already started executing our go-to-market plan in Qatar, where we are working directly with family offices, 10 to 50 million. And so we've got a phase of paper trading with them right now, where we've got 5 funds that are paper trading our strategies, and that will enable us to then. We're also at parallel going into a sandbox in the UAE. So that's a 6-month process where we show our technology in the UAE so that we can move into retail traders in the UAE. So that covers off our GCC strategy. When it comes to the United States, we're going directly to the brokers because there's a new rule, SEC 203 brackets A, and that's basically an internet advisory rule. And what they've done is they've enabled for us to have an end-to-end internet advisory that is delivered through a browser to be to actually make trades on behalf of any individual retail trader. There's an interesting couple of factors that have changed also inside the market, where NASDAQ is changing to a 23-hour trading day, and they just today, 4 hours ago, eliminated minimum $25,000 for day trader minimum, and so the market is really heading in our direction where, just to come back to answer your question, we're looking to really fuel up our revenue from the GCC region and then invest into getting retail traders in the United States.
With Qatar, is it letter of intent or is there actual revenue?
No, letter of intent. The reason being is we probably would have had revenue by now because we went over to Web Summit, we presented, we established our company, regulatory company, but with the war, it's just slowed down significantly. People are just a little bit less, excited about going to their job every day. Unfortunately, that's the reality.
Hey, thanks for being on, Zeshan. Let's go to our next picture. Thanks for the VCs for the first round here. So next up here we have Sylvain. Sylvain has a cool OpenClaw-like company. Sylvain, I'm going to bring you to the stage. We can see your pitch deck. So the stage is yours, my friend.
All right, great. Thanks, Charles. So yeah, I'm Sylvain, the founder of Molten Rock, which has a grand vision of being an enterprise-ready automation solution for business and professionals built on local AI agents, principally designed initially for OpenClaw, being the most popular. And OpenClaw, we gave them and AI agents the keys, but we forgot to build the lock, essentially, right? With OpenClaw, especially, super powerful automation, actually AI that can do things, but all of the passwords and secrets, API keys, etc., are in plain text files. So anyone that knows anything about security knows that's particularly bad. One hack or whatever, and all your data is lost. We see an enormous market opportunity, of course, and OpenClaw being the main local AI agent now. There's a few others that we're also compatible with, but that's the one we're focused on due to its market presence and an enormous opportunity really in corporate and enterprise automation and processing. Our solution is a suite of trust. So I've built a solution using the secure enclave on the computer, which all modern computers now have this hardware chip, also known as a trusted execution environment, which, in my design can allow zero knowledge of the passwords and keys to the local AI agent, but also a number of other unique and novel applications, essentially, right? So it's secure but practical, and certainly now with the enormous power of these AI agents, most computer systems are becoming even more vulnerable and less secure. So we offer a sort of more local, private, and secure solution for your data and privacy, while still having the power of one of these local AI agents. The ecosystem, I see it as an infrastructure play. So think of it like an app store, but for secure and private apps. We sit not on the application layer, but actually protecting the keys. So on a step back, more of an infrastructure, and we would be able to, automate processes, but also have secure with data filtering and custom permissions that are built into the app itself, which allows other apps to connect in. I'm currently also building 4+ apps that would fit in and connect to the Molten Rock secure vault system at the back end, that allows lots of different sort of use cases and applications that have not been done before, right? This is totally new kind of white space. So there's all sorts of new applications that even, big software companies and SaaS companies, would find it hard to adapt, essentially, right? I think with the new models that are inevitable. Why now? Well, obviously, AI agents, especially OpenClaw, has exploded this year, the last few months. Super powerful, but obviously lots of risks. But it's open source, so that means that it's free space to build upon and to integrate with, and certainly the amount of traction that OpenClaw and other agents have got already, we feel that they're here to stay. Got one app already in the Apple App Store, so Molten View. Very simply, it's just a blank canvas for on-demand views, so you can just ask your agent to do anything, show any kind of view, maybe some statistics or comparison charts, bar graphs, and it will just pop it up. You can ask it in your native chat, and it will just pop it up. And quite simple now, but I see it as a sort of future of enterprise where the frustration I'm sure we've all seen with config hell when it comes to corporate systems or SaaS systems, where that one useful button you need is buried 5 menus deep, and we're looking to sort of re-engineer that and just you ask your agent where something is, how to configure it, and it will just pop it up into this view, and it'll be there for you. Also, how to approve and different queues and that kind of thing. A bit about me, as in my intro, the founder of Switzerland's leading natural sun care brand. So protecting skin mainly in Switzerland and Europe, but now looking also to protect keys. Yeah, career in banking, which also led to being one of the first guys at the first regulated crypto bank in Switzerland, Zug, where protecting keys and secrets and crypto keys was fundamental, where I certainly learned a lot of the great practices I'm using now. Yeah, pre-seed, it's still just me, so looking for 350K to get started. Apps should be ready in the next 1 to 2 weeks. Should Molten Rock itself, and then a few others in the next following few months, and looking to get a couple of hires and also some security certifications to be able to promote to get into enterprise and companies. Yeah, so that's it.
Thanks,
that's
Sylvain.
questions.
Yeah, I've got a couple of comments and then questions, right? I feel the pitch deck should start, yes, with the news article of OpenClaw for those that haven't followed the moment and explaining why this was groundbreaking for the world, the OpenClaw moment.
Yep.
And then potentially the second article, Claude Mythos, right? Claude Mythos, which exposed that an agent found like 180 very deep vulnerabilities in like 1 day. Right.
Mhm.
And it was so worrying that Claude didn't release the model publicly. Right. I think that would be striking. My first question. My first question. Yeah, because decks are all about like getting attention, right? Telling a story, entertaining, and then getting with the realistic technical details. Do you feel you have the sufficient credential, the cybersecurity side of things? Shouldn't we hire a technical cybersecurity co-founder for you?
Yes, that's what I'm looking to hire now. Obviously, learned a lot in security, and now you can use your AI agents as your security engineer, essentially, right? There's no one better than the brightest and best AI agents to find out what the current security standards are and to audit against it, right? So that's what I've been doing. But of course, I want to get a security engineer and audits in to verify and certify all of that too. Yeah.
Yeah, because your banking background is quite intriguing. Not sure if you work cybersecurity there. Plus, you're in Switzerland. Switzerland means a lot, right? Like it means safe. It means vault. Means neutral, right? So that I think plays for you. It'd be nice to hear a bit more about the story as well and the Puru skin care brand. That'd be a bit fun, like quick story, right? So that investors can understand. And then my favorite question: what's your go-to-market plan?
Yeah, so being the first to market with this solution, right? So no one currently offers anything like this, despite the massive issue. And only 2 days ago, I think I sent you the link, right? The founder of OpenClaw, who's getting a lot of traction now, admitted that the security on the key side for this software is lacking, right? And they haven't been, focused on it. So it's an enormous white space and opportunity, I think. And yeah, first to market and use that as my main part. Yeah.
Oksana, any questions, feedback?
I wanted to ask why you are the best person to solve this problem. What makes you unique? Because the problem is obvious, and I know with certainty that you're not the only one that is building this. So nothing came to market yet, but the arm race certainly have begun already in multiple venues. So why you? Why, like, we understand why now, but why you?
Yeah, I feel I'm very well positioned with my background in crypto, right? And that's what I've actually built. A lot of the part is to do with that, right? So there's a crypto element to it with the secure execution environment, but also I've put in a number of other interesting design principles in there that align with that. And I think that's clearly the future, right? So it's using hardware, infrastructure, these types of chips. But yeah, I have a passion and extremely knowledgeable in this area, if not in my career and professional necessarily, but it's a passion of mine. And yeah, I'm determined to be the first and best solution in this market.
And who are your the top 10 customers and why? And how do you get them? Just
So-
a little more granular and go to market that Charles asked.
Yeah, so I think small and medium-sized enterprises to start, right, in Switzerland that absolutely care about the secure and private data and automation, right? So, you know, ultimately these solutions and this type of agents will replace most employees, right? Essentially, there'll be computers on desks where there used to be lots of people, right? And there'll be automation solutions. And I think the kind of sell here locally, certainly with enterprise and my contacts here, where it's everybody knows each other in Switzerland, especially Zurich and Zug, etc. Right? I think I can find, through my network, an extensive network here, lots of integrations quite quickly.
Marianne, any questions or feedback for Sylvain?
I think the deck needs work. I agree with you. I think this is very challenging without having some kind of cybersecurity expert or talent on board. And then a company I think it would be worth looking at is Truffle Security. I would take a look at their website and what they're pulling off and how they're doing it. And I think that would be helpful. Just it'll come up again.
Sure.
Just a slide with like 3 or 4 point forms really kills it. It's like too much point forms. It's that one really breaks the momentum because the others were sort of good. Sunny, any feedback?
Yeah, I mean, you kind of touched on this, but I was just curious to ask you. So what happens the day that OpenClaw ships native key management?
Oh, that's a good one.
Yeah, well, they won't necessarily, right? Because it's the hardware is specific to each operating system and computer, right? So Mac, is the one trusted execution environment that can't necessarily be on every system. So OpenClaw at the moment is open source and multi-system. So it's not necessarily that will be them that do that, right? So I think it's an open space in that respect, right? Because to have the same design, yeah.
What point taken? And then one more quick one, Charles. So you've literally done key management at institutional scale, right? Well, why aren't you leading with that? Like that's the kind of stuff that VCs write checks for.
Yeah, it's a good point, right? I definitely saw that was the main feedback right today. That I'll put more about my credentials right in there. But yeah, I guess one would be that with security, right? You have to be secure, but yeah, for sure I'll put more in about that. Those credentials.
And using OpenClaw as your security advisor is smart, but it also kind of alludes to the fact that anybody can do that, right? They could potentially use OpenClaw as their security. Yeah. So anyways, but I think you have a great business. I'm obviously a crypto guy. I'm also an AI guy. So I've been tinkering with OpenClaw and I actually deleted it because of my fears around this specific problem. So keep working on this. Is awesome.
Appreciate it. Thanks.
There you go. Thank you, Sylvain. Let's go to our third contender, which is Adam. Adam, welcome to the show. Thanks for being on. The stage is yours.
Thank you. So Adam Good, CEO, co-founder of Auric. Now we're building the scent intelligence layer for emotional well-being. Now our belief is really simple, that lighting, temperature, music, sound all became programmable, yet scent is still very manual, and we're changing that. So a little bit about myself. I've had 2 decades building new technology categories in digital advertising, as well as a $1 billion hardware streaming business here in Australia, hardware subscription business that really redefined how people experience content. My co-founder, Alex, is a robotics engineer with deep expertise in hardware, AI integration, and manufacturing. Now, the problem, well, scent has this human ability to influence your nervous system in seconds, yet the category is still very manual. Stress, poor sleep, fragmented focus all become real daily problems now, and yet today's solution really is just very primitive. We've got candles, diffusers, there's no personalization, there's no automation, there's no data loop. So one of this most important channels to wellness is still very technology primitive. And we're solving that gap. Now, the solution is our first product called the Auric Aromasphere. It's a connected scent system that delivers scent rituals for calm, focus, energy, and sleep. We have 8 therapeutic oils that are preloaded in the system, and the platform personalizes rituals using mood as inputs, user behavior, biometric health signals. And we have an RFID smart capping system that tracks intelligently refills and reoccurring subscriptions. So it's a hardware plus consumable plus app to be a compounding wellness platform. Now, what makes Auric really compelling is the business has this behavioral loop. The device creates the install base, the connected usage tracks the app via an app control and drives this ritual behavior. These rituals are created and form this ritual loop. The smart caps refill the usage, and we have the reoccurring revenue, high margin therapeutic oils. So the model is really wellness behavior that becomes this engine to increase the lifetime value of the user. And so why we win is because that hardware builds the network and the data deepens the moat. We have this patent pending RFID smart capping system. We have the 8 therapeutic oils that we've had them graded in Australia by the Australian government through the TGA, Therapeutic Goods Association. And those 8 oil creates 4 moods and 26 structured aromas across calm, focus, energy, and sleep. And through a growing sort of personalization and understanding the intelligence of usage and refill, over time, this becomes behavioral driven. And we input with health biometrics. We have Apple Health and Google Health working now, and that improves the inputs and recommendations. And the high margin consumable business makes this a very compelling attraction. So our traction's been really strong in both consumer and enterprise. That's proved the model out. We've generated around $500,000 US, or 700 US Australian money. We have over 800 customers that are onboarding into the platform now. And we have the enterprise level as well, where we've developed Australia's largest telecommunication company, Telstra, their signature scent, and are rolling out to 250 stores right now. So we're also been on television here in Australia, where we generated 300 orders just in one night. Now, we've just recently closed our pre-seed, raising $700,000 US, and we're now opening very soon our seed round, where we're seeking 2.5 million US at a valuation of 12.5 million post money. This round will scale our manufacturing. We have 2 tooling systems already in production in China right now, and grow our install base and the recurring revenue through the oils and intelligence. We want to deploy an additional 6,000 units over the next 12 months and 4 new B2B clients that are onboarding through trials at the moment. So we've proven the model through 2 years of hard work, and now it's time to look to the next side of the Auric business. So we're busy seeking our lead investor at the moment. So I'll sign off the pitch by saying we're not building a diffuser brand. We're building the next intelligent layer for emotional well-being. My focus ritual has just finished, so I'm ready for the questions. So thank you very much.
Thank you, Adam. Yeah, I've been a fan of the company. A very smooth presentation and pitch deck, so good job on that. Some revenue, right? You checking a bunch of boxes. When are you thinking to connect this to Auric Whoop Band, so that if you sense that my stress levels are high, you just diffuse lavender?
Oh, absolutely. So right now, Apple Health and Google Health are up and running and working. We've had a real focus on sleep at the moment with proof of concept. We're working with Reputable Health in the US when our first 500 customers are onboarding. At the moment, we're going to be doing quite a lot of work in the other mood states. We have data now from Uraring, who are very interested in what we're doing. Whoop, no doubt, will be part of the process. We've taken some sample data, and we believe that we'll be able to bring that on board through our Auric Wellness signature. So behind the algorithm is actually 150 research papers on scent therapy, in how it improves your cognitive ability or improves your relaxation states. So the biometric data is working really well now. So we want to interface an 8-sleep bed and lots of other biometric inputs. There's 1.2 billion wearable users out there, and we certainly want to take them from stop looking at data to actually triggering scent-based rituals that can help them with their mood states.
Yeah, I love that. Why not start as a first slide the Nespresso of essential oils?
Yeah, we often talk in our pitches that Auric is the elegance of e-soap, the functionality of a product like Sonus, and the simplicity of Nespresso. The Nespresso business model is certainly something that we follow.
That VCs love, that VCs dream of.
Yeah, exactly. I mean, Nespresso went enterprise, and they really solved. They built their business through the Japanese market. Educating people in a new category from tea to coffee. There was plenty of coffee machines out there, but they really attracted with their colourful pods But when people were using it in enterprise, they said they wanted that at home. We're finding that now with our trials. Every time we put another Auric Aromasphere in a corporate place, people just want to take it from home. I did a pitch last night in Sydney. I've woken up this morning and five new sales from people just experiencing the room. I do a lot of Zoom calls, but you're not smelling the beautiful aromas that we have. So enterprise, we drive a lot of sales. So Telstra as his sample, 250 units to be rolled out across their network. We want to do more of those.
There you go. Gonna bring one of your investors on stage, Oksana.
Yes.
I call it maximizing serendipity, right? I speak to a lot of founders and VCs, and there you go. Oksana, tell us why you invested in Auric, or any feedback you have for Adam on the pitch deck.
Look, we backed Auric. We have a strong conviction that scent is one of the undigitized human experiences that influences greatly how we do that, but no one was bold enough to tackle digitizing that. And we believe this is necessary. So that's why we back that. The founders have a fantastic founder market fit from the perspective of being passionate about this, a combination of a hustler and a hacker. They have in this one team a fantastic talent set to launch it right, because they're going to be a mega brand. And so Adam has that experience and in wellness, and Alex is a kick-ass robotic engineer. So we love that and how they've built that. We've excited because they've more than doubled their sales since they've started with Sputnik about a year ago. And what surprised me is a corporate client, to be frank. But now that I think about that deep, I think that is the way to go. So I love their strong pool both in consumer and B2B. And that's the champagne problem. They will have to figure out where to prioritize. Charles, I am harassing them on exactly where you were. When is my wearable going to be there? Adam and Alex will certify every time we do a catch up. I said, when is this? When you will sense that I'm stressed coming to the office and calm me down, because that is the future. And that's where they're heading.
Hey, we have a question from the audience, so let's just take that one. So, hello from Dubai. I'm very interested in this. I manage a scenting company. We have more than 12,000 B2B location, MENA area, 3,000 houses. I didn't see how your system would work in B2B businesses. Do you have devices that work in large areas? Can it link to Alexa? Do you have a certificate like Oceana or other oils, IFRA, whatever that is? So, Adam, can you answer that?
There's a few questions in there. Fantastic from the Middle East. We represented Australia at the Entrepreneur Cup in 2024 in the Middle East, so we've got some context there. Talking about large spaces, interestingly, this diffuser is the Aromasphere is very much for smaller spaces, so ideal for living rooms, bedrooms, home offices, sort of corporate spaces. The large scale area, we've actually launching in July our second product called the Auric Atmos. It's a HVAC solution, so scent being triggered through the air conditioning for larger spaces. We needed to build that for Telstra. They have 2 flagship stores with very large, think about Apple Store kind of footprint. We needed to get their signature sent in that space. And so we've got that product now, and we're rolling the first store out in July. So now we can do small spaces and large spaces with Sense Intelligence, all connected to our software layer. So the software layer is the RFID tag tracks usage. We're the only company in the world that knows aroma preference, plus when they use them and when they're going to run out. So the whole business model is based on selling them aromas that they love, and the ones they don't love, we understand, and we are obviously looking to replace those. So hopefully I've answered those 2 questions.
Right. Yeah, I love the B2B play as well. I'm a B2B guy, don't do B2C. If I can help you get in retails, I'd love to discuss that. Marianne, any questions for Adam?
I don't have a question. I have 2 things, Adam. One is, I think you should be reaching out to Pura Vida, like they say in Costa Rica, Pura Vida Ventures, from Common. So they're opening these gyms called ARC gyms, which are these boutique gyms where they use all this digital health. And there's a MD that's a partner in that group, and they're building one of these gyms in Chelsea in New York right now. And they fund, I think this could be super interesting for them. And then also, have you talked to Tom McQuillan at Regen Ventures in Oz?
I haven't. Okay. I would welcome those introductions.
Yeah. So those two, I could see having a very natural fit with, what you're thinking of doing, and also it would let you play bigger than $750K or and so good investment by Oksana. I agree that this is a good domain to go into. A little, like, I worry in the US, like, there's this whole scent-free environment thing, and so that's something. But I think this niche for these gems that ARC is putting out, that Pura Vida is funding, that would be a really interesting play. And there's more of that. There's some of that going on in the EU as well.
Yeah, we're flipping our company right now to a US entity, Delaware Secure. It's almost done. We have a representative in the US right now doing 2 wellness studio trials in New York. So we have the ability to begin that process. 1,000 units will be out from July this year. So we're ready to go into larger markets now.
Hey, a quick question before I give the pearl to Sunny. What's the economics on this? Like in hardware, I'm always worried about the margins. This thing looks like it could cost a lot to actually manufacture.
Yeah, it's actually a low-cost piece of hardware. So recently, the PCB boards are actually getting quite expensive now with aluminum growing. So we're in this process of needing to make some decisions on large-scale units. But we make a small margin on the hardware going out. So it costs around about $150 to make. Now getting towards that $170 to make. But we make a very small margin going out, but then the margin is on the essential oils. That's 85% margin. So as soon as we do the first refill, we're in profit. But it's all about the scale. At the moment, our first run is 500 units, and we're moving to 1,000 units, and that price will obviously drop down. But PCB boards and chips are obviously in huge demand at the moment, so we've got to be wary of that. But our tooling, after 2 years, and our IP and our patents that we've done, we've developed a good model. When we get to 6,000 units, which is what the seed is about, we'll be doing assembly in another more low-cost market. So we've really looked at that. We're both very much hardware, firmware experts, and the business was conceived because of the margins. Essential oils is a large business. If we could activate all those water diffusers that are sitting in cupboards right now, there'd be a $200 million business every month. So this is a big business when you get this right.
Right. Thank you, Adam. Sunny, any questions, comments?
Yeah. Hey, Adam, great presentation. So your scent mood behavioral data from 800 customers might be worth more than the hardware. Have you thought about licensing that data to Apple?
Apple Apple and Google Health have been very interested in what we're doing, and obviously have been very, it's quite difficult once you're going through the app stores to make sure that health data is actually tracked and managed from, because there's a lot of personal data that can be exposed in that area. So we've got some really strong relationships on both sides of that ecosystem. We don't see Apple getting into repeatable oil-based businesses, but we do see their smart home world becoming, very interested in what we're doing. We're getting a lot of smart home providers having conversations with us because we can connect the Audic Aromasphere to Apple HomeKit, to Google Home, to the Alexa, and coordinate aromas with other orchestrations. We love seeing somebody saying, "Oh, my robotic vacuum cleaner I love it even more because we're just putting a dash of bergamot and lavender." Or someone having their roller door go up to drive their car into the garage, knowing that automatically triggers when they come home that there's an aroma experience as well. So we think we spend a lot of time with that ecosystem and people that love their smart home as well. So yeah, I think you're right. I mean, the margins are in the oils. There's no doubt that's where it is, but we'll get even more stronger margins in our hardware. We're not building the Apple Watch or the iPad. It's a very simple device that all the smarts is in the firmware.
All right. Hey, we're going to go to the next contender. Thank you, Adam. Thank you for your presentation. Abby, you have the stage. Maybe unmute yourself and yeah, let's do this. Your screen is not showing for some reason.
Yeah. Can you hear me?
We can hear you and we can see the screen now, so you can go and present.
Hi, this is Abhilash, founder and CEO of Nextstop AI. So every generation's Z and millennial traveler today is paying a planning tax. They find a stunning destination on a TikTok reel, but to actually get there, they have to battle a fragmented mess of 10 plus open browser tabs, lost confirmation emails, and soul-crushing manual labor of building an itinerary. They aren't planning a vacation. They're working on a second job they've never applied for. So Nextstop AI is the first platform designed for socially driven explorer, whether they are heading out on a soul-searching mission or coordinating a 10-person group trip. We have created a social to suitcase pipeline. Like, users don't fill out forms; they simply upload the reels and inspiration they've already saved. This is the Excel sheet. When my friend visited me in India, like couple weeks
Abby, your connection is a bit laggy.
ago, and travelers have been planning our AI instantly that handles group logistics, split booking, AI co-pilot that stays with the traveler throughout the trip. They can show the chatbot a landmark via their camera to get instant recommendations or reschedule an entire day of bookings with one sentence. Our AI agentic engine goes beyond advice by utilizing a unified payments orchestration layer to autonomously handle the last mile. From booking your Uber to executing complex cancellations and instant risk in markups with commissions, we are fundamentally rewriting the economic rules of the travel industry to favor the traveler. This builds immediate trust with the generation that values authenticity over hidden costs. So we are replacing a stress of 47 tabs with the confidence of one AI co-pilot. We aren't just building a travel app. We are building the bridge between digital inspiration and physical experience. We are owning the future of socially driven travel, and who wants to untangle the world with us. So this is going to be a business plan, like any trips under $500 would be $499. Anything between 500 to 1,000 would be 99, and anything above this. When you compare it with the other apps,
Abby, your connection is lagging a little bit, but yeah, let's see. Maybe some feedback here. Well, one, have a good connection, right? Like, because else, how will you be able to pitch VCs? I gave you feedback, Abby, like on the first time we spoke, right? Like I was sort of worried that Claude could do something similar. If I connected to Kiwi, I know that you told me that it wasn't the same, and it was like multiple apps. So what you're building is an agent. Maybe you can turn the video off and answer if yeah, you have a go-to-market plan, especially on the corporate side of things. As a B2B go-to-market guy, I'd like to hear that.
so like we are focusing on like young people aged between 18 to 30 at this point, and we are focusing much on B2C, and we are trying to go to market by promoting the product on Instagram, TikTok, and social media.
Do you have a background in ads or in marketing? Like, why would you make these great ads that people would click on? I mean, I've run a Facebook ads agency for 3 to 4 years, and it was exceedingly hard, even back then, to distinguish my ads from the competitors.
So yeah, I don't have an background in marketing as such. Like I'm definitely looking to hire someone who is like interested in our concept to take us forward.
Okay. Thanks for the quick presentation and succinct answer, by the way. Oksana, any feedback for Abby?
Yeah. I think I would go really deep, because what was hard to understand, and the sound, yes, I second what Charles said. Make sure you're heard, because that's the first step to being invested in. I didn't quite get why you're the best person to solve this problem. I have to say that I see every time we get about 1,000 applications, no less than 5 are trying to solve the travel issue. So the problem is broken, but people have not solved it yet. So what I would love to be able to see clearly when I can hear you, why you are the right person for the problem. What do you understand about this problem that other people don't? I have not heard that today, and maybe because this is because of the sound. So that would be my number one advice.
Marian, any feedback?
Yeah, that's
No,
a
too broken up for me.
great question. Actually, it comes from my personal experience. Sorry, can you hear me now?
Yes. But we're about to skip to the next founder.
So yeah,
maybe with the connection. Maybe address that, and we'll go to the next. All right. So we're gonna go to the next person. Thanks, Abhilash, for this one. Wong, welcome to the stage. Tell us a bit more about your business and what you're building there. You're muted. Just unmute yourself.
Can you hear me?
Yes, you have the stage.
Thank you. Smart Trainer is your AI assistant for restaurant chains. My name is Wan Zhang, CEO and founder of Smart Trainer. Let me introduce Dan, my CTO, who spent the last 2 decades as a software engineer focused on big data and machine learning. Now, as for myself, I spent the last 19 years working for industries and companies like IHOP, Noodles & Company, Domino's, and much more, from a host all the way to director of training. And in those 19 years, I've actually experienced one same issue within every single brand that I've worked. So let me introduce Sanjay, your typical general manager from any store that has an average turnover of 140% in the store. What that means is that every month you have a new team member and a team member leaving. So Sanjay, or the manager, is too focused on teaching the team members the bare minimum to run a store, not where to find the data. What Sanjay really needs is a actionable guidance that's going to help him reduce his food costs, labor costs, and his missed opportunity that is costing stores up to $60,000 per store per year. So that's why we built Smart Trainer, a AI analytic that is running and monitoring your whole operation, from collecting every single data piece from every single part of your business, from every interaction that you have with our machine. It is collecting and giving you feedback in real time. With Voice AI, we're collecting over 500,000 interactions last year alone, being questions to commands to Vision AI, using your existing security cameras to tell you there's 14 pepperonis rather than 20 before it goes out to your customers. And using predictive AI, using all the data that it comes with against real-time data that's going to give you, such as local church events, traffic flow, to tell you what's going on in your business and how do you react with it. So how does it work? You can start your shift and talk to the machine saying, hey, trainer, what's my opportunity? It can tell you how to adjust for your overtime coming up. How much more prep do you need to do? Or you could even tell it to go make your whole schedule for you. Or if there's rain coming in, you need another driver. See, when our competitors are done making the data and getting the data, the damage is done. They're being reactive rather than proactive. When you look at our customers and the feedback that they get, they want things to be smoother, faster, and smarter. It's not about having another platform. There's enough platforms in our industry. It's about taking that data and giving it to you in real time, telling you how to solve that problem. At Smart Trainer, we make money by a $99 subscription fee per store and a one-time $500 tablet. And we're targeting a $3 billion market globally with a SAM of $500 million with 1.6 million restaurants just here in the United States. We're currently on track to do $770K by end of this year, and we're on track to do $31 million as our target goal for the next 5 years in ARR. We're already working with brands like Domino's, Marco's Pizza, and Pizza Ranch. And we're also backed by Rizzoline, a data company for Domino's that has invested into us, giving us 9,000 stores data. And within those 3 brands that you see up there that we're currently working with and have a wait list of, that's a $20 million ARR initial sum that we're going after. We're currently seeking $2 million to scale to 1,000 stores in the next 12 months. Just yesterday alone, we had 4 more logos reach out to us for a pilot, and we're the very first company to partner with AR glasses to make Smart Trainer a hands-free 100%, being able to answer questions directly from the machine. That's it. Thank you. I kept it short and simple.
Thank you, Juan. Yeah, I'm about to buy these Oakley glasses by Meta. I had the Ray-Ban already. They're pretty cool. They're very promising. Couple of questions for you. First is a comment. So you have a huge background, right? Like Noodles and Company, Paul USA, Domino's Team Washington for 5 years, Director of Training and Recruitment there. Why not show that on slides at the first slide?
To be honest with you, this was a slide that I just made for investors so that they could focus on me. I have a deck that actually lists everything out. So I just gave it a try, to be very honest with you.
Because, you know, like I'm pretty sure Oksana is going to ask, why are you the right person for this? Which is a very good question, by the way. That answers it like right there. You're the number one guy for this. Then, you know, my questions, GTM, right? Like, so do you have a revenue right now? What's the traction?
Yeah, to be honest, one of the reasons why we hit some of those things is I would like to not have it publicly recorded right now, but I'll be happy to do that offline. But we do have traction, and I can say that we have probably another 170K in our wait list, if that's a good way to kind of measure and give you some numbers.
Yeah, there you go. Yeah, I like your presentation and your smooth, your silky smooth presentation there. Oksana, any questions for Juan?
Well, you tend to ask my questions before I get to ask them. So, but Juan, first of all, I really loved that you got traction with actual customers, because I think in this world where anyone could create anything, I think the real defense mechanism is your distribution, customer intimacy. So the most impressive thing for me was the wizard line, the fact that you've convinced the people that do data for Domino's to give you data. That's huge for me. And what Charles asked, I think knowing that found a market fit in the eyes of VC is a really big differentiator that will tell me that not only you could know how to vibe code and talk to Claude, you also understand the problem really well. So I think those two things are a really strong one to punch. I'm curious about the next customer. So you're getting into Domino's franchise. How, walk me through, what's your take over the world strategy? Who's the next 5 customers and why?
Yeah, absolutely. So right now, we targeted enterprise because once it's a high CAC in the beginning, but working directly with corporations and bigger franchisee, that's actually getting us into the rest of the franchise group. So just those 3 brand alone is $20 million of initial SOM that we're going after. Now, that's a good market alone, but we also have another market where mom and pop stores as well. This is a target that actually a lot of people don't want to go into in our field because there's a lot of churn, etc. But the difference is with AI, we could actually automate this whole process. And with third-party POS systems like Clover, Toast, with a 13-digit code, we could have them up and running within 48 hours. And that's another market that we can target, expanding our current market size, almost doubling.
Marianne, any comment, question for Juan?
I like the deck. I love a founder who is trying to solve a problem that they have an intimate knowledge of. I think that's the best founder. So good. Clearly, you have domain expertise. Yum Brands is if I was shouting out anything from the rooftops to you, that would be. And I think I agree with the deck. I would go big elbows on this is why me, this is why, and this is why, this is what we can offer. I think overall the price point's probably a little low in my mind. What will the market bear, right? And plus one on what Oksana had said is pretty impressive that you had the willingness of people to provide you with the data. I don't know. My only that scares me a little bit is you had people give you information from security cameras, and I just wonder if there's not some kind of consensual issue there, the privacy issue that could bite you a little bit.
Yeah. So these are security cameras that's literally designed just for the product quality. So there's a separate camera that's on just searching for the product. Now, we have also gone through for these brands 9 months of security checks, etc. That's gone through for these enterprise. That's also another moat for us, is that it's not easy to get in. So that's my answer.
Thank you.
Sunny, any questions, comments?
Yeah, Juan, it strikes me like you're not building a training tool. You're building essentially the operating system for restaurants, right?
Yeah, I'll be very honest with you. Smart Trainer is a name that we started, and we pivoted actually 2 times. We actually started 3 years ago with a light up smart bins that lit up when you ask what's in a dish. And then we started to get into AI, and then we started into this whole ecosystem where it's everything talking to one another.
And you're charging $99 a month to save $60K a year. Why aren't you charging 10 times that?
Absolutely. So we actually targeted $99 for the initial growth and the first beta. We actually launched our this product after pivoting just end of Q3 of last year. So it hasn't been that long. We're just scaling. We're just getting into the market, and we actually have a plan to where it's going to be a choose your feature kind of thing, kind of like a buffet a la carte, and we have the price going up to $200 and more. This was just aggressive because when we first targeted the three companies that we typically replace, they were adding up to about $120. So we targeted aggressively to say, hey, you can replace 3 of those features to get instant ROI. So we were here at 99. That was our plan. Yeah.
And just last comment, one is Domino's your customer or your future acquirer?
Their
Or
customer.
ex-employer.
Ex-employer and a customer right now. For acquiring, we're thinking another company. We think in the future, either we become the acquirer or they're going to acquire us for our data as we get into more robotics and more automation. The thing is about in our industry, automation, when you think about automation, we think robots making, pizzas and stuff. But realistically, that's not going to happen anytime soon in the next 10 years. They're more focused on automation of specialized automation. So those one that's just there to stretch the dough, that's just putting the sauce, and it's the whole process. It's about taking that and taking the data behind it to help support that. So that's kind of how we see the future of our.
Super cool.
Thank you, Juan. Thank you, VCs. I love the succinctness of the last presentation. Keep that up. Eric, you're next. Let me share your screen here.
No pressure.
Boom. The stage is yours, my friend.
All right. Well, thank you very much. My name is Eric Burgess, and I am the CEO and co-founder of CredTent. I'll tell you a little bit more about my co-founder, Dr. Galen Buckwalter, who was the founding scientist at eHarmony later in the deck. And what we've built now is really the neutral licensing infrastructure for the AI economy. The bottom line is AI companies are being sued left and right for having this move fast and steal things attitude about how to build their models, whether it's the New York Times suing OpenAI, the now two-fisted attack from Encyclopedia Britannica and Merriam-Webster on both the subject of copyright infringement as well as trademark infringement. A $1.5 billion lawsuit that's now being settled with Anthropic. The bottom line is this is just getting really worse and worse. And the bottom line is, in the old way, that's what they were doing. They're web scraping, and they're now talking about putting synthetic data into more of their model training. While that works for some scientific means, for creative means, it's a terrible idea. And of course, it introduces massive legal risk for folks not understanding whether or not they're going to be violating intellectual property. And ultimately, they could be leading to model collapse because of the low quality data with an increasingly AI composed internet. Our way of approaching this is instead to say, let's help the companies license the training data at scale, certify that the work is indeed human composed, and ultimately connect it as a full cycle licensing solution for paid display referencing in AI search to stop that trademark problem with basically OpenAI trying to say that in some cases, LLM generated content was directly from Encyclopedia Britannica. We provide valuation in the space to be able to help creative folks make sure that they're getting enough money for their work. We certify work as human composed and ultimately provide a licensing as a service solution that benefits both sides. We are not an anti-AI company by any stretch of the imagination. We are interested in providing creative companies, rights holders, and data providers agency in the age of AI. But the goal here is to also help the AI companies with the compliance side of things. So that's what our structure is built on, is to be that sort of, go-between, to be able to help them orchestrate these relationships with them and take a 15 to 20% commission in the process. What are agreements that have been designed by a lawyer who was responsible for was the deputy director under the USPTO under Obama, is to license content with blanket retroactive licenses to indemnify them against past use. They get credible content from expert sources because we only deal with highly credible content. And of course, they get that model efficacy out of the mix. And for the content companies, they get fair compensation for their work and an opportunity to get both compensation as well as consent. We've built already the Creative Origin sort of disclosure infrastructure that's been in place for about 2 years to help companies actually disclose, is their work human composed? Is it AI assisted? Is it AI composed? And we provide that to the industry as a free option, for commercial use. We also do certification for that to be able to provide a higher level of it for regulated industries and also just for marketing. For example, one of our first customers was HelpText, which they do grief text messages out to people, and all of the folks that buy from them, hospices and hospitals, were very concerned about saying, is this AI generated? We help them actually certify that their work is indeed human composed, and it gives them an opportunity to be able to say, hey, we have a neutral third-party utility that's checking out on that sort of thing. But we also help content valuation. I actually worked with Dr. Buckwalter on building the Earned Media Value Index that the marketing industry uses to judge the cash value of social media actions and endorsements. And we've been working as a research as a service company for the last 9 years before we became CredTent. So we have real special expertise in valuation in the content space, and specifically in influencer marketing, again, earned media content. And I've been a content a relevancy expert for a long time. And providing a one-stop licensing utility to bring together kind of the, if you will, the middle powers of content, we're providing AI companies an opportunity to be able to get more licensed content into their system, reduce their legal risk, and ultimately we also give a free option for people to ask for their content to be opted out. And we regularly send that out to over 25 different AI companies to encourage them to put in guardrails in place, and also to just track that information effectively. We're never going to be anybody's lawyers, but if there is a lawsuit in the future, we'll have the receipts. I built CRM systems in regulated industries for over 10 years. We track absolutely everything that happens. This space is exploding right now, as it is. Andreessen Horowitz just came in and invested in one of our competitors that's on the other side, that's sort of the scale side of the business. Our focus is on the premium side of the business. We work with Hollywood, we work with publishers and great online media companies. But the data is going to be, how this is going to be defined in the next decade. If AI is going to deliver on the kind of incredible valuation that they suggest they should, they need to have licensed content so that they're not constantly being sued. All of these lawsuits are going to give them a Napster moment if they don't get out of it. And it's an opportunity for companies like Perplexity to actually get ahead in AI search because of what we're providing now. Opportunities to be able to say, hey, if there's a zero click response from your AI overview, then we need to actually compensate those people for their work so that it shows up there and it's certified, and actually AI is delivering the best results, not letting SEO turn into GEO, which is just a ridiculous thing. We need to kill that in the crib, to be honest, so that it's about AI delivering what we expect, which is the best possible results, not just the results of somebody who's been the loudest or has paid the most money. The space is really growing right now, and we're seeing more of these output kind of licensing that's already happening. It's already happening in the music industry, and we're getting the inquiries, and we're getting more and more people coming to us. I was literally interviewed by the Wall Street Journal a couple weeks ago. I'm speaking to Forbes tomorrow. I just did a briefing for Gartner because they realized this industry, which is like $4.85 billion right now, because they're already paying, the AI companies are already paying billions of dollars to the largest media companies around, but we're helping make sure that everybody gets an opportunity to do that. And while premium license users come in, they can actually help set their pricing if they want to after they hear what we have said about their pricing. Individuals can actually sign up as well and get basically Spotify style payments out. And we only charge that 15 to 20% margin, which is beating the rest of the folks in the industry who are trying to charge a lot more by just basically acting as brokers. Because of the fact that we have that neutral utility where we really are kind of Switzerland in this space, it's actually helping really strengthen things. And as our content library continues to build, more of the AI companies are getting interested in working with us. Our scientific approach to this has helped us actually not just get the creative folks on the side, but get the attention of the AI companies. And as I said, our focus is on the credible side. It's about premium content. We work with recognizable brands and highly credible folks to be able to make sure that you're getting really high quality data and not just more AI slop, if you will. We've already put together a library of great content to be able to make available to companies. Companies like Rosen Publishing Group, which is an educational publisher with 12 lines of business that has all human composed content that they own the rights to. So there's no question about owning the AI training rights. And their work is very specifically age appropriate. It's foundational. So we're already working on licensing that to some smaller companies for an America 250 project to create founding father avatars so that kids can interact with them, but also an adult could interact with them and get the appropriate responses. We're working with Sports Reference, which creates unique sports statistics on top of existing box scores. We went directly to Perplexity with them because we already knew Perplexity was interested in their content. Science and Medicine Group, Twin Sisters, and we also are working on the credibility side, or sorry, the AI detection side with the Writers Guild of America. Our badge system has been approved by them to be able to get to advocate for our badge to show up at the end of every film, just like you see a medallion that talks about the Humane Society making sure that no animals were harmed, or the MPAA ratings. We want to get our badge system into there to say, everybody knows whether this work is human composed, it's AI assisted, it's AI composed, so that people have that information available to us. We passed their very, very firm structure. And now when you register a screenplay with the Writers Guild, you can also ask for the screenplay to be actually AI checked, and we can validate that it is human composed. We work with not one AI detection tool, because none of them are particularly good. We actually have an array of them that we run against in our local offices. That was, a complete requirement for the Writers Guild. This is something we actually built for a proposed pilot with PBS, but as you know, PBS had probably the worst year on record last year. And so thankfully it was ready for the WGA and gave us an opportunity to do that. And we have the endorsement of Academy Award winning screenwriter Billy Ray, who won for Captain Phillips, to get us further into the space. And actually that's opened the door that we're now working with the Creative Coalition on AI, which is actually all of the guilds coming together to actually set some standards. We are providing them research, become a research partner with them. We're talking to OpenAI, to Perplexity, and Amazon about potentially bringing the CredTent library into the Bedrock space, as well as licensing for Nova. And we're starting with Google and Anthropic now. The way that we bring content partners in is we help them with content valuation initially. This is part of our moat, is our unique way to do this. While we have standards that we've set up by doing deep analysis of all of the deals that have happened in the space, we take a more holistic view of it to be able to help make sure that we understand everything about the content, not just about what it means to the AI side of things, but actually what kind of happens what's the uniqueness of the content, what are the success attributes associated with it, awards, certified sales figures, all the things that prove to the fact that this is quality content. And then ultimately our human composed verification process. For some folks, they come in and it is a one-time thing, if it's a book or it's an album of music. But if it is an online media company, that's a revenue relationship, a recurring revenue relationship, where we continue to go back to them either for online media companies on a quarterly basis or annually for some of the larger brands and publishers that we work with. And ultimately, they go into our independent creative registry, where it becomes the marketplace for the AI companies to go in and essentially license content there. And we prep all that data so that the AI companies can understand the actual value of it. Oops, sorry, something going on there.
Hey, Eric, 1 minute more.
Okay, well, I will move ahead to how do we make money? Well, we do make money on the AI training licenses, obviously, but we also, those are recurring revenue relationships. As I mentioned, my co-founder, Dr. Galen Buckwalter, who is that is a brain-computer interface, so we do have a cyborg working for us. The reason I work so well in Hollywood is because I was a producer at Disney for 7 years before I started making enterprise software. Galen, of course, has been in eHarmony and has been providing human understanding to people's products for a long time. We're both also creators. I'm a writer. Galen is the lead singer in a punk band. So we have feet in both places, which is one of the reasons why we are indeed the right people to be able to do this, because of our research background and our creative background as well. We're currently raising $1.5 million pre-seed round. That 70% of it's going to sales and marketing because the platform is completely built. And we're getting it all ready for the seed round, which we expect to do in 12 to 18 months. All right, sorry, went a little long.
Thank you, Eric. That was great. I love the presentation, the flow, the slides, everything. A couple of questions here. Why wouldn't OpenAI or Anthropic sort of bypass you and negotiate these contracts themselves?
Well, they have done that with the largest companies, but in many cases, these media companies actually didn't get as much money as they should have because it's asymmetric information. They really understood more. We've done the analysis. We have our data science team has a background with a lot of these companies and understands what it actually means, the values actually mean. And the truth of the matter is they really just don't care about smaller companies, mid-tier media companies. They just haven't really had any kind of focus there. We're making it easy by packaging all of this together, and our compliance as a service side of things lets us actually help them with disclosures. Keep in mind, in August of this year, because of California and because of the EU, they're going to have to start disclosing all of the content that they actually used in their training as training data. And we actually built the system to be able to help them do that disclosure without revealing their trade secrets. And we want to help these companies out. Our goal is to do this. We want to see AI innovation happen, but we think it's a false choice that you can't pay for the other side of things. Because in many cases, the creatives, really what they want is they want consent, and they want to know that somebody is being compensated for the work before they will embrace these tools.
Second question, why 100K if these guys pay $100 million bonuses to recruit an AI researcher?
That's an abstraction of the money that comes in for these organizations. So it really is based on what kind of a deal is involved. So, for example, the Perplexity deal that we're talking with Rosen is a $10 million 3-year deal. And that's more like the actual size. But then we also are licensing some of their content again to this. It's to UC Irvine actually for a project there to be able to do that. So the range of sizes is significant, and so it's an abstraction of the actual values. We have a detailed data room with lots of information if anyone is interested, and we're happy to share.
I'd go with at least 1 to 10 million, just generally speaking, ballpark wise. The last question is a trick question. How do you crack the chicken egg problem? Since you're the guy in the middle, how would you crack that?
We cracked it by going with the content side first. So we built up a library of content first before we did that, and we knew that Rosen was good enough. We knew that Perplexity was very interested in sports reference. We got to the number of folks to be able to have the conversations with the AI companies, and it's work to be able to get us in. They're a little distracted right now. OpenAI gets hot and cold sometimes, back and forth. Perplexity does seem focused on that, but the bottom line is we are coming to them with a lot of high quality content, and it's a mixed network effect, right? The more that we get AI deals, the more that we'll bring in more content folks as well. We're already ready to do content valuation for a couple of large media companies I can't mention the name of, because they know that we are the experts in that subject.
There you go. Oksana, any questions, feedback? You're muted. Let me try to unmute you. Oops, sorry. Okay, there you go. You can talk now.
Eric, first of all, great on picking up a really big problem. We're very familiar with this. We actually backed a company that tangentially touches this for creating the content, video content for books. So I would love to talk offline. Maybe there is a collaboration. If the product is ready, tell me why revenue? What are you waiting to sell? Like, who is the first customer? Why they're not the customer yet? I'm a firm believer that you co-create with your customers. So that's a surprising thing to me. Talk about that.
Well, I mean, the first thing we wanted to do was we did deep research to be able to make sure that we could handle any type of content available. And that was a key part for us, because we know modern creators don't work in just one space. We did deep dive a little bit on the B2C side initially, just to be able to see how much there was going to be interest in that space. But as always is the case, and as Charles probably would say, B2B came calling much faster, and because they understood the value of what we were doing. And so that was a little bit, one of our founding CMOs loves the B2C side, and so we're laser focused now. And so we are getting revenue in from our customers, because they pay us for the valuation, they pay us for certification, and ultimately, but the big payday comes with the AI deals. And so we've just started now in the last basically 2 months to be able to initiate the conversations with the AI companies, because we wanted to make sure we had enough of the other side of the business to be able to make it worth their while. And that's clearly what the response we're getting now is. Clearly we have enough of a licensing group, but we are also, we close 75% of the deal of the content partners that talk to us, because they know this is a real problem. And our pipeline is full of some very impressive folks. So.
Right. I want to take a couple of questions from the audience before I go to you, Marianne. The first one's VC check size. Can quickly answer that one. Anywhere from 250K to 1 million, and pre-seed and seed for most of us here. The second one is more technical and is for directly for you, Eric. So I'm going to read it. There's a whole lock-in concern when the memory and context layer is stored and can't be extracted from the large LLM like Claude OpenAI. This gives the LLMs a lock-in mode. A company's IP, which in the future is the memory and context, needs to be owned by the company, not the LLMs. Just my 2 cents. Any comments on this?
Well, a couple of things. One, it is a fiction that the content is not actually stored in these systems. Recent research shows very clearly that it's just compressed and shown in there. I can give you some research links if people are interested in that. Secondly, we already know that they have done some great research, particularly Anthropic, on about how to suppress content that is dangerous content. And we believe that that can be used for the purpose of licensing of content. Lastly, our licensing agreements prevent direct imitation, which means we say you need to put a guardrail in place to say stop somebody from saying exactly, give me a song in the style of Taylor Swift, give me a book in the style of Margaret Atwood. That's basically asking the tool to plagiarize. And so by stopping that completely, you're reducing the possibility of market replacement, which gets them into a legal issue where most of the, if you look at most of the, and we look very closely at all the legal efforts out there, most of them are about that kind of thing. And so we can reduce this significantly. And actually, the research we've shown shows that even creators feel more comfortable if indeed content is in there, but you cannot use references to names, to the to the books, the direct work of the individual. If you can avoid that, a lot of people feel a lot more comfortable with using these tools.
Okay, thank you. Marian, any questions, feedback for Eric?
I don't have any questions. I'd turn the deck upside down. I'd put founders up front and just say, like, nobody's got a deeper bench than we've got, here's why, and the other thing, and also, like, here's the problem we're solving, and no one is in a better position to solve this problem with us. I'm always like a little iffy on badging personally, but I like from the creative side, I hear what you're saying. And I talked about this before. I really like the Project Liberty website and the data and research they do. And if you, that would be a good reference, like to have on slides. I'm in the sciences, and so we're always thinking about these shadow data and data sets, and so that's very intriguing in that part of the business. I don't know, like the badging thing, but certainly like peer-reviewed data, like there's something there that isn't mentioned in your deck that I think could. Maybe
we have a lot of additional information in our data room about that subject. I mean, we take a very scientific approach to this. Dr. Buckwalter obviously has been in that space for an enormous amount of time, and I've spent the last 10 years with him on that subject specifically. But I mean, I come from a product and marketing background. Again, I made video games for Disney. I've made enterprise platforms and regulated spaces specifically, and so. Yes, I think we are exactly the right people to do this. Maybe people with a little more gray hair, if you will. And the bottom line is we've had great responses from working with the Center for Humane Technology, with the Integrity Institute. We're a connective tissue organization. We're not trying to dominate the space, but we do think that we need standards to be able to put this out there. You see a lot of other organizations trying to put out a human authored badge or whatever it is, Society for Authors come out. It's just going to confuse people, and so that's why we built a simple 3-badge system that has a scientific look to it. If you see them, they look like they are from the periodic table, and they're very, very simple. And it's again the folks from the Writers Guild who are, I'll tell you, in the entertainment industry, the Writers Guild are more put the pressure on this kind of thing more than anyone. We were very proud to be able to meet their standards to the point that we were able to identify very specific copywritten data in screenplays, and train these models on a screenplays that have not been trained before. A lot of these large language models are not trained in that way, so we've done local versions to do that. So,
Sunny, any questions?
Yeah, Eric, a great presentation. I was going to ask you, Spotify killed Napster by making paying easier than stealing, right? So if you do that for AI content, aren't you essentially building the kind of the Swift network for the entire AI economy?
In many ways, I like to think of us as the trust infrastructure for AI, because keep in mind that while we are about credit for your content, we're also about credible content. And the sort of next phase of what we do is Dr. Buckwalter's work is on a science of credibility to make sure that if you look at a web page, can you determine whether it is something that is credible, not just for a human to look at, but also for a crawler to look at, for an AI to actually, for an agent to be able to process. And that is where we go to the future. If we consider ourselves a transition company to make sure that creative folks are getting compensated for their work and that there's credible content in here. But the second order effect is to fight disinformation and actually to make sure the efficacy of these models is really superior by breaking down some of these ideas of saying, like, royalties are not going to work in a data world like this. It's blanket licenses. And for the AI companies, stop trying to do little silly things like charge for SEO in your results. You're going to end up with crappy products. And the way that the best AI is going to win is that it's going to be built on highly credible content, not from the loudest people or the people that paid the most. It's from the people that are actual experts in the space.
Thanks,
There you
Eric.
go. Let's go to the next contender. So thank you, Eric, for the presentation. Mark, we have you on stage next. Outdoor Builders, you have the stage, my friend.
Hey, first of all, let me check my audio. Is it better now?
Yes, way better.
It's better? Okay. Let me just begin my presentation. Hi, I'm Mark, co-founder of the Outdoor Builders, the AI-first system of record for the construction ecosystem. We're empowering contractors, homeowners, and suppliers to build faster, better, and smarter together. The problem is that the construction ecosystem is broken. All the stakeholders tell us so. Contractors are experts at building, but they lack the systems to run a business professionally. This operational chaos creates a transfer of operational and financial risk. Therefore, 74% of homeowners regret their projects due to finances, delays, and mistakes. The result, trust fails, and 32% of projects halt entirely. And recently, we found out that half of the market defaults to DIY, which is just lost opportunity altogether. The solution is to find the right contractor for the right project. The right contractor has the right teams and systems, but few can afford both. We provide integrated AI assistance for every business function that they cannot previously afford to hire for. And the version 1 of our system has solved the time to revenue problem conclusively. Now a contractor goes to the homeowner's house, they take a picture of the project area, they use a state-of-the-art proprietary real-time AI design tool to sell the vision, and we're the only platform offering proprietary photorealistic designs exclusively with integrated manufacturer products. This is a moat. They then use our agents to quote, upsell, and sign the customer on the spot with complete document transparency. They then get funded either by a partner bank or through ACH, and then they can collaborate with the homeowner, subcontractors, and employees with our centralized AI brain, which helps minimize pricing mistakes and further builds the expectation of a bespoke, transparent experience. The impact on 4 case study contractors has been transformative. Project profit is up about $10,000 each from upselling and closing larger tickets, as well as minimizing mistakes. The closing method is now in the customer's yard. It takes about 1 hour rather than a few weeks. And closing rates have gone up with seasoned pros from 17% to 68% because we are more memorable and we are instant and we are more professional. We began with by designing the industry leader in design, by creating the industry leader in design. This was to capture the industry headwinds. We have built a full AI-first ERP system, and next we're focusing on revenue quality and top-down influence. Revenue quality being from commercial projects as well as manufacturers and large enterprise clients, just like the ones you see on the screen, like Oldcastle and Baselite. Traction is good. In 8 months, we've made about $416,000 in revenue share. Partnerships with SiteOne, which is the largest supplier in the United States, which is great for distribution. And we have also partnered with Synchrony Bank for financing our projects. We make money on the back end with each of these. The market opportunity, as you may know, is massive. Everybody who has a home knows how much of a problem this is. And in the United States alone, this is a $611 billion market. But the beachhead being, the V1 that we've built out is $40 billion at 7% commission. The revenue share is based on doing business with contractors who do 50 plus projects a year. And to get to 100 million ARR, we need to get just 0.2% of the yearly projects of this kind in the United States. This we can achieve just in California alone, which is about $20 billion TAM. And the total TAM for the whole world is 2.7 trillion. Now note why we're talking about the whole world is because we're modeling behavior. This is not just constrained by the resources in the United States. This modeling behavior idea came from the endorsements from top-down influencers that we're talking about, the manufacturers and people who are leading industry research. And so this is what we've built our company around, and this is why we feel like we can tackle the global problem. Why us? Bruno is a celebrity contractor in the Bay Area. He has built and exited 3 businesses and sold over $30 million in projects. Mark is a 3-time founding and AI engineer, once with a HF0 backed company with one app having over 1 million users, and is also AI native degree holder. We are Auto Builders, the global operating system for the construction industry.
Love it, dude. Yeah, except the Mark part, maybe like I. But it's, I mean, one of my favorite presentation. You're a client of ours. So yeah, I'll take the Oksana card here, and I won't comment too much, but I mean, I'm biased. It's one of my favorite presentation. It was so good. It was flowy. The pitch deck was good. There's revenue. You're so investable. That's all I have to say. Oksana, any thoughts, feedback? Muted again.
Sorry, guys. There's loud music happening. That's the beauty of being around. So I'm sparing you that. I love that you're building in the industry that most people forget. And I think that's where the most AI dollars will be made, is in bringing that. So love that. And I love that your co-founder is a contractor. So kudos on that. Talk to me, because this seems very local. So talk to me, what's your location to location strategy? How do you going to expand? I see how you get to Bay Area. How do you go, let's say, to Austin, to Chicago, or like, and how do you think about the metros?
So that's the conversation we're actually having right now with Oldcastle. So the only constraint we really have there is reach, and is also the products. So when we are building out our operational system and our AI tools, we try to integrate the whole ecosystem up from the manufacturer all the way down to the supplier who's fulfilling the products. So the constraint really is to get the manufacturers to allow us to host their products on the platform so they can get the deals, so they can get the purchases. So that's an easy conversation at that level. It's really easy because we're having these conversations every week. The other constraint is really the relationships. This is a very relationship heavy business, and that is why I guess many people have not been able to break through. That is our advantage right now. But being able to scale from the vantage point of SiteOne, which we're already partnered with, and Oldcastle, which we're working on, allows us to now build those relationships with their contractor networks, with their, with the operational partners, et cetera, et cetera. Now, if that doesn't work, the model is the same. We actually have a client out in Florida. Now, they may not care about the products on the system. They care about, can they just use the operational system? This is something that they, everybody just agrees on. Like, look, if we could do business like this, everybody would just make more money. Everybody would save much more time. Everybody more profitable. So it's just a positioning thing, and it's also a consumable, like, communication thing. So that's how we scale place to place.
I would love for you to try the Tupperware model, because I think that's actually something that could work really well, where you go into the community with one contractor and have them take a little fraction of, like, kind of become your VAR, for lack of the better word. There are a lot of these, they're mostly female businesses that grew from like monetizing the small group of people. And think about that.
Yeah, did you say Tupperware?
That's exactly what it's like, because how Tupperware scaled, you pick one charismatic housewife and equip her with Tupperware, and she would sell, and she would get a portion of sale by. And so if you penetrate, like, so that I think is the model that's underused, and a relationship become more valuable. And that's a great way for you to help someone help make more money in the market, but also penetrate that. So I would experiment with one of those in a different geography, because you become a lot more compelling if you do at least one of those.
No, I totally agree. Thank you so much for that. I've actually written it down. Thank you so much for that.
Yeah, it's a great idea. Marianne, feedback, questions?
Yeah, I like it. I hate the slide with the river. I would clean that slide up with the dots in the river. That's just very juvenile. Just not being overly critical, but like I'd just clean up that slide. It's not sophisticated. And I actually know a lot about this industry, and I've invested in a different business. I shared some stuff with you privately that I think follow through on that, because I think there's some really important lessons learned in terms of scaling the business and who you think your customer is, and who they really are, and how to grow. So if you connect with those folks, I think that'd be pretty amazing.
No, thank you so much. I've actually taken it down and put it in our team chat.
Sure.
Can we connect offline about this, perhaps?
Sure.
Thank you so much.
Sunny, biased because Mark's a client of ours, but any
of course, yeah. Mark,
questions?
yeah, great job, buddy. 17 to 68% is insane. right? But that's for contractors. Does that hold when you go from 4 to 400?
I mean, we don't have that data yet, so I can't tell you. But the thing is, and the reason why this behavior has been modeled is because homeowners are so excited that they can get to sign on the spot and everything is so transparent. And so we're leaning on that. We're leaning on the driver being the demand for this behavior. That is what we've modeled a whole company around. And the more we can tend to these, like to build our software around this service of trust, this service of efficiency, service of cost saving, the more I think that we can drive up this closing rate. But of course, the more competition that happens, the more this may fragment out. Remember, our main competitor isn't necessarily contractor. They might see that, but our main competitor is actually the 50% of jobs that are lost to DIY. This is a top-down metric that is coming from manufacturers. They're telling us, like, working with a contractor is so terrible that we just try to do it ourselves, and obviously that project will fail. And so the more of this triangle we can eat at, the more we can expand this market, the more we can, help everybody out. So that's how we see it.
Yeah, and Mark, one last one. So SiteOne, right? They're aren't they one of the largest suppliers in the U.S.?
Yeah, it is the largest. Yes,
they are, right? So and they partnered with you. And so, at what point do you stop being, their partner and start being more their platform?
That's a good question. So they see us as a way to drive sales, but also to save on operational cost. The boundary is not clear, really, and those are the discussions we're having right now. And the reason for this is that everybody's looking at us also as a tool to market themselves and to be able to compete better with other people. SiteOne was necessary for us. That's almost an exclusive partnership because these guys are the only guys who would push us nationally, right? And so we really try to get that through the door quickly, initially. And so, those are the conversations we're having. So it's an ongoing thing. We'll pitch some ideas to them. But our nature of the deal right now is basically, look, if we can get the contracts and the quotes to them, they quote it out, it's efficient, and then we make money on the back end. Now, how we expand this, it's a very furry thing that we're trying to figure out because that's just where we are right now as a young company, 8 months old.
Yeah, great job. I mean, you guys need what, like 0.2% of the entire US projects to hit like 100 million ARR.
Yep.
I think
That's
most founders would they'd kill for that kind of math. So I guess the last question is, like, what's actually stopping you?
So initially, I think it was the timing. We got our biggest breakthrough in the tech a few months ago. And so we were headed into the winter. The winter is usually the cool season for the market. And so the conversations that are happening are usually on ice because it's winter, right? But as it goes into the summer, as people are now starting to, ramp up the sales and everything, then we're supposed to lean into that kind of headwind. So it's basically been seasonal, but also we need to set ourselves up for that. And that's why we're trying to raise money. We're trying to raise money so that we can set ourselves up to really capture the market as the seasons go and set the expectations as the seasons go. And so that's the reality of how we've ended up where we are.
Awesome.
Thank you, Mark. Thank you, VCs. We're going to have the last contender on stage. Tommy, can you share your screen so that we can see your deck? The plus icon at the bottom here.
Yeah, let me do that. I thought the deck was being shared by you guys, so let me just load it up really quickly. So
yeah. I promise that Tommy is worth the wait.
Yeah, I'm a pretty fun one. So let me just please get this.
And we're gonna take 10 minutes more for the show, just so that people know here because we're already on time. So plus icon, Tommy, again, quick share screen so that we can finish our days here.
Yep, loud and clear. I have it right here. Okay, fine.
Have a hard stop. So VC has a hard stop in like 5 minutes. So let's share the screen. Plus icon again on StreamYard.
All right, here we are. Okay.
Yeah, there you go.
So
the stage is yours.
Let me introduce Rashi. We are a new foundational model, and we're a mom and pop shop trying to compete with large language models, generative AI. We are building a foundational technology to compete with generative AI. We are building a foundation model for qualitative insights. So we're building a high-end inference engine, and we're building a technology that's more prompt to knowledge graph than chatbot. So our technology complements the use cases of generative AI, this artificial general intelligence, of generative AI that's more question answering. We're more insights. We're building an insights engine. We're building the next foundational information technology where we went from search to question answering, and now we're going to meta-analysis, which is this idea of insights, which I've been thinking about for 5 years. So again, we are building an inference engine, and you can think of what we're doing as kind of an inverse and AI native Palantir. We're building a Palantir for text mining. So that means that we have this ontology layer, and Palantir has an ontology for like internal quantitative data, but we're building an ontology for qualitative data and internet data. We're building a technology for strategic ideation capabilities that is beyond the capability of generative AI. And the point is, with our technology, it solves the problem in between the consumer analysts and the content publishers. It is a new capability for the content publishers. Think New York Times, they publish 75,000 articles a year. So for them to have an inference engine on their content, would that be a new product capability that they can offer as publishers? Then on the other side of the coin is the consumers. So think of a class of customer of the New York Times that we call the analyst, where they'd be interested in mining for insights from this huge amount of content from the New York Times. So the point is that we are building this new foundational insight technology for content publishers and consumer analysts to be able to, it's a new democratized capability. They can mine insights any which way that they wouldn't be able to do with generative AI. Our technology is fundamentally more precise, reproducible. It's a fundamentally more signal extracting technology than generative AI. And the point is, everyone's kind of talking about insights. If you ask me, you go on any website and they'll have on the front page, they'll have their like marketing webinar of their industry insights. And we hear the word insight a lot from venture capitalists. So is there an idea for like a meme, like a new kind of iconic application of AI for insights? And this idea of being able to create a structured technology for insights that is different than like question answering. So that's what we're working on. So the point is, it's really about mining internet content at the forefront of your strategy, which we think is the underexplored opportunity in the era of AI, which generative AI doesn't really do so well. It's a democratized capability for analysts. We are building a technology for high agency analysts. We're building a new inference engine to be able to curate inferences. This is really about curation. So the core of our technology, it's about from page rank to topic rank. It's about effectively a topic mining technology. That is what we're building. And I mean, this is just a small shade of our capabilities. It's really about the full suite of understanding what your content is about, how topics evolve, topic web pages for extracting deep signals, more so than summaries of information. It's more about extracting signals, and pretty much the best technology for you to be able to build very bespoke insights. So we have a really nice team. We're all very passionate about building this non-cynical technology. My CTO is a math Olympiad from 30 years ago, more of a statistics background than like generative AI kind of thing. And we're bright-eyed dreamers and striving disruptors, trying to build something that's very good, very pro-human, very much about high agency analysis and the technology that came from my job previously. I was working for a large consultancy systems integrator kind of company. And I was, me and my boss were effectively the CTOs of the CTO office. And now he's my co-founder, that's Nagy. And the point is we were professional analysts and professional futurists. And then we seeded this idea to solve something large language models do not solve. And the rest will be history. So I'll take a pause there. What do you guys have to say?
Yeah, let's start with Oksana because she needs to run. Any feedback for Tommy, Oksana, or questions?
Tommy, I love the space you're playing, and I think that's related to the qualitative insights as the part that's usually being lost between things. I'm curious how that actually works. Like that comes from my experience of being director of marketing strategy at Motorola. Like it's like those are usually the most useful and the hardest to get at. So I would love to see a side-by-side comparison for you. I also like would encourage you to. There is a better way to present it. I don't have time to give you enough pointers.
That's fair.
For all the founders, I will be doing office hours when we launch our application season. So if you want to talk more, do that. Charles also asked me to say who is my favorite startup. Obviously,
yeah, because you need to run. So quick.
So because I've invested in them. But if I were to exclude Adam, I would say it's between Eric and Mark Eric. There's something about that name here. So that would be a tie between those two. But great job, everyone. Building is very difficult, and you guys are really doing something special.
Thank you, Oksana. Marianne, quick feedback for Tommy, and then we're going to stay.
I
a
like
bit
it, but I
more-
hate the deck. I think, yeah. So in no way should a tech guy not be able to get the presentation up. But I hate the deck, but I like what you're doing. So you work to be done, but I think you're onto something good.
Cool. Sunny, any questions, feedback?
Yeah, great job, Tommy. So I was going to ask you, so you said you're building the Palantir for text mining. I mean, Palantir's moat was government contracts and classified data. What's your kind of equivalent locked-in distribution?
Well, we are going to market with a government partner, which I'm not going to say anything more than that. There's a lot of business intelligence use cases, strategic intelligence use cases. It's an inverse. Palantir is operational insights, and we're more for strategic planning insights. So my point is, it's like an inverse use case. So in a way, the use cases are very much not competitive. Like they're more for day-to-day operational intelligence, and we're more for strategic planning kind of planning. And that's it. But otherwise, like a lot of the ideas are kind of similar in the way that, these are high ticket value contracts that we're trying to sell to enterprises. We're trying to license our technology to content publishers, such as companies on my screen right now, such as like Elsevier. They're the biggest research publisher in the world. So, trying to get these kinds of customers. No promises, working on it, doing my best. Yeah, I mean, this is very much B2B. I mean, we are going for high ticket, even though everyone says that we should go for easier, more palatable use cases, more SMBs kinds of things. I mean, this is very much a technology for, I think, sophisticated enterprises, in my opinion. And like, I mean, this is just how we want to build it. So.
And then one last one, Tommy. So if your ontology layer works as described, every publisher, hedge fund manager, intelligence agency would want it, right? So I guess why are you raising a pre-seed instead of just signing a pilot with these types of companies this month?
Yeah. Pretty much the tech needs to do the teching. We're almost there. We're stabilizing our platform right now. I'm pretty confident that when I get there, I can have a really iconic launch and raise a fat seed round. I mean, let's see. I know what I'm trying to do. I know what my strategy is. Right now, all I need is to raise 500K. I know that. I got a team of 11 people and we're super tight. And I mean, I know exactly how to deploy that capital. And the point is, I don't want to raise a pre-seed because I just don't think that fits with our strategy. Like we're pretty close to getting where I need to go for this to be like, yo, that Rashi guy, that crazy guy, like he was on this podcast a few months ago. How funny. So, that's where I'm trying to get to. Like it's still baking in the oven a little bit. Like we're pretty much at the point where we're having beta users.
Right. I have questions. I respect the craziness, right? I'm one of these myself, like quite absorbed and different type of human being, like alien. I love the high ticket approach. I approve that. You've got the Charles approval on that. Don't listen to others. I've been doing B2B for 10 years now, and this is the way to go. I'm just unsure about like what you do still. I love aliens, but I love understanding stuff better, right? Like I think only technical people would dig your language, and most VCs are not that. Even like the deep tech VCs, they're not really scientists. So like simpler language. And my follow-up question is, I feel you're sort of swimming in similar lanes as CredTent, the presentation you witnessed by Eric.
I was listening to it for sure.
Yeah. How different is it from CredTent?
So I love the space that they're in. I think we're solving completely different problems. I think it's more about kind of the real practical challenges of being a content publisher. The thesis is the same, which is that content publishers are still underappreciated in the era of AI. For instance, New York Times, for instance, Springer Nature or Substack, or even LinkedIn, that these companies still aren't really fully utilizing the value of their data in the era of AI. I think that's really kind of the aligning thesis. And I think it's completely different problems that we're solving.
All right. Well, thanks. I'm going to bring everyone on stage, do a bit of a different thing today. But we'll start with the VCs, right? Just asking everyone who was their favorite presenter today, not just VCs, but founders. right? So I can start. Tommy, I know you didn't listen to much presentation, so Maria, you can go second, or maybe you can give a word or two. Tommy, my favorite presentation was Cred10. And I'll tell you why. At first, when I met Eric, I wasn't sure about like Cred10, right? Like I'm a very OpenAI and Anthropic advocate. I love the impact that AI had on humanity. And I'm not too much for people suing for copyrights. I'm not too a copyrights or patent type of guy. But then the second time I heard it, which was today, his deck, I was like, okay, I get it. And Eric needs a bit of help on the GTM side, so I may partner up with him. I give him a fellowship, a RazRocket fellowship, and do the GTM for him and unlock him the 1 to 10 million contracts, right? So I would be his GTM arm. So I'm quite bullish on them. I also researched his co-founder. His co-founder is a legend. He is responsible for 4% of the marriage in the US through eHarmony. And he's like a bionic. He has like literally fucking rods in his head. And so I need to get that guy on my podcast, but I'm extremely bullish on them. Marianne, who was your favorite person? I know that you need to run.
I don't, maybe one, but I think there's a lot there. Look, I think all of them are good. I think I don't know if I had a best, but a couple of the decks I hated, but it doesn't mean I think that what somebody's selling or what the possibility optionality is good. So, but that's just me. So.
And quick note on that, like decks are super duper important, right? Like me and Sunny, we do free pitch deck feedbacks, and if your deck is no good, you'll just lose the VC's attention. Sunny, any favorites?
Well, I can't pick Mark because he's our customer, but no, my favorite of all the new ones I learned about today was definitely Juan. I'm feeling the whole operating system for restaurants vibe, and Eric, which was kind of like this, Spotify Swift network for AI. So those two stand out in my mind as being super interesting.
Sylvain, you witnessed a couple of presentations. Any feedback or favorites for today? I think you're muted. Microphone issue. While you do that, maybe Mark, you can take did you listen to a couple of deck marks today?
Yeah, definitely. I liked Wands because even prior to this conversation, I was thinking about, I know restaurants can't hire quick enough because people are churning so much. Now, how do you solve such a problem, And so, he comes up with a solution that I think it goes better with people who are human with AI, where you're not trying to replace everybody, because there might be market backlash, but also, he's solving an operational problem that is worth a lot, clearly by his metrics. So, yeah.
Abby, I'm not sure about your connection, if it's back. Juan, any favorites for today?
I liked Adam. I loved how his swag, to be honest with you, and his product. I'm a very scented person, so I was actually looking for your product. So.
Adam, any feedback on the decks you've heard today? Founders and VCs also?
Yeah, no, it's a great format. I've obviously watched this on YouTube, so it's nice to be part of it. And thank you all the VCs, the way that you are so attentive on every single pitch, and you seem to be chatting in the chat rooms and on LinkedIn and giving lots of recommendations. So I know you see thousands of presentations, but your attention to detail is really thorough. So thank you very much for that. Yeah, look, I think Juan definitely won the day. It was a great pitch. I was very much interested in that. So I think that is what everybody, has gravitated towards. I mean, it had everything, great idea, great pitch deck. And it's just, the food industry does need some innovation. So yeah, I think I think that was pretty impressive.
All right. Well, thanks to all. That was another Spark Tank show.